What if I told you the average American will pay over $1,000 in credit card interest this year without buying a single new thing? Not a purchase, not a splurge, just the price of never making one 5-minute phone call. Right now, Americans are carrying more than $1.1 trillion in credit card debt. The average interest rate sits around 24%. That means if you owe $5,000 and only make the minimum payment, your bank is quietly charging you almost $100 a month just for the debt to exist. But there's something almost nobody does, something that takes less time than ordering a coffee, and it can cut that interest rate in half, sometimes more, with a single phone call. Stay with me, because in the next few minutes, I'm going to show you exactly how this works, why your bank will never tell you, and how to do it yourself today. To understand the trick, you first need to understand the game. Credit card companies don't make money when you pay on time. They make money when you almost pay on time, when you make the minimum payment, when you let the balance breathe for one more month. That interest rate isn't fixed. It's not carved in stone. In most cases, it's negotiable, but the system is built so you never find out. There's no button in the app that says, "Lower my rate." There's no yearly reminder email. Banks are counting on one thing: your silence. And here's the number that changes everything. Industry surveys consistently show that more than 70% of people who call to negotiate their interest rate actually get a reduction. 70%. That's not luck, that's a pattern. So why do so few people ever try? Because nobody ever told them how. Picture this. It's 7:42 p.m. on a random Tuesday in Ohio. Sarah, 34, working 2 jobs, carrying a $4,300 balance at 26.9% interest. Every month she sees the same number on her statement and feels that same familiar knot in her stomach. One night, after watching a video like this one, she decides to try it. She dials the number on the back of her card. It takes 40 seconds to get transferred, and she says one simple line, almost without thinking. "I've been a customer for 3 years, I have a good payment history, and I'm considering transferring my balance to another card with a better rate. Is there anything you can do for me?" Silence, a few keystrokes. Then, "I can offer you a 9% reduction on your current rate, effective immediately." 5 minutes. No paperwork, no fees, and hundreds of dollars that will never leave her pocket this year. This isn't a marketing fantasy. It's a script you can repeat word for word. Here's exactly why this works, broken down into 3 layers. Layer 1, the power of the word transfer. When you mention you're considering moving your balance to another bank, you trigger something inside their system: customer acquisition cost. Banks spend between $200 and $300 to acquire a new credit card customer. Keeping you, someone they already have, is far cheaper than replacing you. You're not asking for a favor. You're activating their own financial logic in your favor. Layer 2, your history as leverage. If you've paid on time, even just the minimum, you're statistically a low-risk customer. Representatives are often authorized, without needing a supervisor, to offer rate reductions to customers with good payment history. They're not bending any rules, they're using ones that already exist. Layer 3, timing matters. Calls made Tuesday through Thursday between 10 a.m. and 4 p.m. tend to connect you with representatives who have more decision-making authority and fewer urgent calls stacked up. It's not magic. It's simply avoiding peak chaos hours. 3 layers. None of them require a lawyer, none require a perfect credit score. All they require is picking up the phone. Here's the full process in 5 steps that you can do literally today. Step 1. Find the number on the back of your card, not the general app number, the direct customer service line. Step 2. When you get connected, ask to speak specifically about your interest rate, APR. Don't ask if it's possible. State that you want to explore your options. Step 3. Mention your history, how long you've been a customer, whether you pay on time, and mention calmly that you're evaluating balance transfer offers with lower rates. Step 4. If the first answer is, "There's nothing we can do," politely ask to speak with the retention department. That department exists for one purpose: to stop you from leaving. They have more flexibility than the first representative you talk to. Step 5. If you get a reduction, ask whether it's permanent or temporary, and ask them to confirm it in writing, either in the app or by email. 5 steps, 5 minutes, and an average savings between $300 and $1,500 a year, depending on your balance. Here's what nobody calculates: the cost of never making that call. If you have a $5,000 balance at 24% interest and only pay the minimum, you won't just pay years of interest. In some cases, you'll end up paying more in interest than you originally borrowed. 5 minutes of an awkward phone call versus years of overpaying. That's the real trade most people never see because they never frame it that way. This isn't about having more financial discipline or cutting your spending to the bone. It's about understanding that the system has a back door, and that door opens with one phone call. So next time you see that number on your statement and feel that familiar knot in your stomach, remember you don't have to accept it in silence. Pick up your phone, dial the number on the back of your card, and say the line that changed Sarah's night. 5 minutes. That's the entire distance between overpaying for years and taking back control